And now it is time to get your home loan related queries answered by our expert. This is our special home loan segment. We are joined in by Krishnan Gopalakrishnan, Group Credit Head, Reliance Commercial Finance and Reliance Home Finance. Welcome to the show, sir. So the first query which we have is from Surendra Mishra. He has written into us. His email says that I have shortlisted a Pratik style home in Noida. The unit will cost me around rupees 95 lakhs plus registration. I am a private tutor and my monthly income varies from 3 lakhs to 3.75 lakhs. I pay service tax, but I don't have regular salary slips as proof of income. Will I be eligible for a home loan? If yes, how much can I get as a home loan? Please note, I pay rupees 45,000 per month as rent. I have no other loan. I pay school fees of 30,000 rupees. So what do you suggest?
Mr. Mishra, you're definitely eligible for a loan. The main thing that home loan lender looks at is the regularity and the consistency of the income. It doesn't matter whether you have pay slips or you don't have pay slips. In this particular case, the kind of documents that we would be looking at to see how eligible you are for a loan would be your income tax returns, your bank statements. The regularity would be evidenced by earlier loans that you would have taken that you've repaid over a period of time. It's very good that you have you pay a rent of 45,000, and if we have rental agreements and other proofs to that effect, even that would go substantially to help us decide on giving you a loan. So yes, the one other factor that you need to look at that I don't have data on, most lenders look at capping their loan tenure such that the loan ends by the time you are 65. So I presume you are less than 65. So as a self-employed person, I think you should be eligible for a loan in the range of 75 lakhs if you're able to prove with these documents.
Okay, so next up we have a caller, Jyotika from Mohali. Yes, ma'am, how can we help you?
Hi, I have a savings of about 3 lakhs for my household and I have a joint loan with my husband. And the outstanding is around 32 lakhs approximately. The current interest rate is about 9.7%. Should I prepay my loan amount or should I invest this amount in FD or PPF, which will be more beneficial for me?
Okay, we'll certainly help you on that. Mr. Gopalakrishnan, which will be more beneficial?
Jyotika, you're in the kind of predicament that most of us home loan borrowers find ourselves in when we have a little surplus cash with us. I think you need to look at the whole problem from whole issue from 3 filters. The first one is the kind of tax breaks that you get that you're enjoying right now on your home loan. As you know, under Section 24 of the Income Tax Act, you get a deduction of up to rupees 2 lakh as interest on home loan. If it is a rented out property, of course, there's no limit on the amount of interest deduction that you get. So the first one is to see, how much of a tax loss you would be, or how much tax break you would be foregoing by doing the home loan repayment. The other filter that you need to put to assess whether you need to repay the loan or not is to see your liquidity needs over the next couple of years. In case you're planning to buy a new car or going for furnishing, then you may look for a loan at that point of time. And my advice to you would be to park your funds till then and not prepay the home loan, because home loans are the cheapest source of loans. If you were to go in for another personal loan or a gold loan at that point of time, the rate of interest would be much costlier. So that's the second filter that you need to apply. The third filter that you need to apply is what is the interest rate that you're getting from your alternative modes of investment. If you go for a PPF, there is an issue of liquidity and it gets tied up for a long period of time. If you go for FDs, again, the interest rates compared to the tax break that you're getting as currently as your deduction on interest on home loan may not be that remunerative. So ultimately, I think you need to go apply the filters of how tax effective it is, what are your liquidity needs over the next couple of years, and whether your alternative mode of investment pays as good a return as the tax breaks that you get on your interest on home loan.
So that's it, Jyotika. You can look into the advice which Mr. Gopalakrishnan has said. Thank you so much for joining us.